Hi, welcome to the market alert for Thursday, the 31st of October 2024. So gold hits another record high. It's just hit another high overnight as well. And US stocks declined as participants digested earnings and mixed data releases for yesterday. And stocks hit in midst of earnings season as tech underperforms, i.e. Nvidia. And UK, of course, we had the budget yesterday. UK gilts soar after Rees reveals budget. Market braces for inflationary debt surge. UK markets opted to focus on the inflationary consequences of the tax hikes, which of course will be the net effect. So let's have a look at the markets. Oh, actually, before we do, let's have a look, see what we've got out today. 10 a.m. core CPI flash year on year, and the estimate as well for the Eurozone. And then we're off to the US for core PCE price index, employment cost index, unemployment claims, and Chicago PMI. Let's just go back a day as well and have a look at those ADP numbers. They came out a lot higher than forecast as well there. So massive change there, inflationary, and the whole thing's a bit of a mess, isn't it? Nothing's going according to the Fed's plans or the Bank of England, so certainly won't be after yesterday's budget. Anyway, let's have a look at the market's reaction to all of this news and kick off with the Dow. So in the Dow, the market's certainly correcting at the moment, way off the all-time highs. It's important that it holds at the 50 EMA. It's just broken the 78% retracement. Let me just spread this out a bit and make it bigger for you. So the 50 EMA needs to hold. If not, the 89 is in the way, and then we head down lower there. We can just see there we've got these other green lines and areas of support if the market does continue to move to the downside. It's going to be interesting to see what happens with Tuesday of next week now with the election after Biden's gaffe of yesterday. It certainly seems to be a swing in Trump's favour at the moment as he destroys single-handedly Kamala's campaign. So anyway, 30-minute charts for the Dow. We rallied up and then we sold off. So the pattern switched at the moment. We were selling off and then moving up. Now it's rallying up to get rid of the stock. So if the market's gone down beforehand and they've not been able to move the stock values higher with the futures and all the derivatives, then what they do is run the market up as soon as it opens and then sell off the stock. Market needs to hold at yesterday's low in order to move back to the upside. Failure to do this, of course, we'll see prices moving lower. German DAX has broken down. We came up, we dropped, came back, retraced, and now we've moved down again. We've got the 50 EMA there. We're below 62% retracement at the moment, drawn from here up to the all-time high there at 19,679. So 30-minute chart shows a decline during yesterday. Had a bit of a rally after the UK budget. Then the market said, you know what, this is not going to be good. And the market currently below the low there. Meanwhile, in the S&P, also moving down as well. 78% retracement is where prices have currently found support. So there's an 89% below this. The low of this bar numbers are 5761, and if we break this, then watch for the 50 EMA there. In the 30 minutes, again, similar thing. Market moved down, came back up, double topped at Tuesday's high. Market sold off and currently below the low there as well. FT100 has also broken its sideways move, and we can see, we just draw it roughly there. You'll see that it's broken below the 200 MA and also yesterday's low at the moment as well. So it's going to be interesting to see what happens. Let's go back to this low that was created when Japan increased interest rates by a quarter of a basis point. So 62% retracement is down there, and then 78 and 89 as well. These are the targets you've got on the downside to that low that was put in place in August. 30-minute charts, very choppy obviously around what Reeves was saying, but market finding its direction there at the moment down towards the low. Now, having said all of this, don't be surprised if you get a bit of a rally off yesterday's low when the market opens at 8 a.m. just because everything is down overnight, they tend to switch things up a bit and then say, well, actually, it's not going to be that bad. It's far worse than the Truss budget 2 years ago, and look what happened to her. But I bet everything I own that they wouldn't slam the markets down like they did after she had that budget, like I say, 2 years ago. What was it, 2022? So yeah, amazing where the time goes. Right, let's have a look at the US dollar. So US dollar is declining slightly yesterday and also overnight. So let's have a look at the impact of this on the metals. And starting off with silver, well, this is interesting because silver went down with the dollar and struggling to move to the upside overnight as well. Holding though. Again, you can see that classic flipping London fix thing where they just slam the price, then bring it back. It's trying to come back overnight now. It didn't get quite down to yesterday's low. But it's like a broken clock, isn't it? It's right every flipping time of 1:30 p.m. every day when they do that fix. They just love to slam the price down irrespective of the fundamentals. So yeah, price is moving back up. Needs to go back above the close. The DP, the 200 MA and the 50 EMA to have any chance of moving higher. Gold has made a new all-time high at 27.90, and if we have a look there, again London yesterday, and now the market trying to move up overnight there as well. In the gold-silver ratio, no surprise for silver yesterday to see this, the gold-silver ratio moving up once more, and we'll see whether this continues during today, but finding a bit of support in silver at the moment with the dollar showing a bit of weakness, but we'll have to wait and see. Okay, let's have a look at the trades for the German DAX for yesterday in the 2-minute chart. So yesterday morning, as I just wind this recording back, we see the market moving down, then it became sideways, making rising lows, and then prices put in a potential buy signal. We saw the market moving up, and I didn't get out in time on this one. It went to the S1, and I thought, well, let's keep it at break even, but the market came down, took out the trade. I was hoping we were going to have a bit of a rally up to the low, which I mentioned in yesterday's alert. We did, but we didn't get enough momentum behind it because obviously we had the UK budget looming, and then the markets just became sideways, which you can see there, and then obviously very choppy, and then moving down to the S3, where 90% of the time the market does find support, unless you're having a budget where you're going to increase taxes by 40 billion. The market then moved down, sorry, I meant the S2 there. The market then moved down to the S3, where 90% of the time the market finds support. But like I say, what with the budget taking place at the time that this trade was on, the market moved just slightly lower, but then found support and made its way back above the S3 into the afternoon there and all the way through. Then becoming sideways and into the grey area where the market remained sideways there after the close of the German DAX. Quick look overnight on the market, again like yesterday, trying to get back above yesterday's low. 200 MA is in the way there, and then you've got the close. Let's squeeze the chart up a bit more so we can see where we are. We're below the low. We're a long way off yesterday's high. In fact, 100, 200, 300 points to yesterday's high. Never discount anything though. After a budget, anything can happen. But at the moment, price is trying to get back above yesterday's low there. Okay, that will do it for this one. And let's see what the day after the budget brings as far as the FT is concerned and the markets as a whole. So with that, have a great day. And as ever, thanks for watching. See you in the next one.